Hello and welcome. My name is Kate Marand. I'm a program manager at the Department of Small and Local Business Development here in Washington, D.C. We support DC-based businesses, small businesses, and entrepreneurs. We have been running a spring webinar series with many of our great partners across government and across the small business ecosystem in the district, all here to support DC entrepreneurs and small businesses with free services, with information and support. We're incredibly excited for this series in May 2024 and incredibly excited for our speaker today. I would like to introduce you to Dolly Turner, who is the Chief of Staff at DC's Department of Insurance, Securities, and Banking. And I'm going to turn it over to you, Dolly, and let you take it away.
Okay, thanks so much. Well, good afternoon, everybody, and thanks for showing up on the Thursday before a long holiday. So I promise that this will be informative and exciting and engaging. First, I'd like to thank Kate Moran from the Department of Small and Local Business. We are really great partners with this agency. We recently produced the expo. We host ongoing workshops together and are great collaborators on your behalf throughout the year. So thank you so much, Kate, for this opportunity. One of the things that I just wanted to, kind of share our inspiration, our joint inspiration around this is that we recognize that as small business owners, you invest the majority of your time in building and managing your business. And sometimes there's not enough time to really think about you personally, your financial future and the future of your family. Because running a business is probably it's a yeoman's job. And there are so many things that you have to learn about and execute on a daily basis. We are here today to support you personally. And this is the purpose of this workshop. And we're so glad that you set aside time. So the first thing I'd like to do is just tell you a little bit about our workshop format today. We're going to talk a little bit about our agency, what estate planning is, some of the instruments, and some of the next steps. What I'd like to share from the beginning is that we are here to provide resources and information. We are not attorneys, and so during this presentation, we cannot provide any legal advice. You will need to speak with an attorney, a certified financial planner, or certified estate planner. Okay, now let's move on. So who are we? The Department of Insurance, Securities, and Banking, if you're not familiar with us, is the financial services regulator in the district. So what does that mean? Our responsibility is to have oversight over all financial services institutions in the district. And our job is to ensure that there are high quality products and services that are available to you as an individual and as a business. And so how do we go about that? We license financial services companies in the district. What we also do is we regulate them. The way that we ensure that these are good quality companies is that we also examine them regularly. We want to make sure that they're in compliance, that they're meeting all the regulations, and that they're solvent, so that the day you go to file your insurance claim, they actually have the financial wherewithal to pay out, that you can actually withdraw the money from the bank, or that if you've made an investment, that you have access to those funds. So that gives you sort of a very high level overview. The other thing I'll just mention is that we have, in terms of the financial services industry, we regulate insurance companies, broker-dealers, agents, money transmitters, banks, check cashers, and any number of financial services businesses. So when you think about what is involved in financial services, we're the person that you can go to. And as we end our presentation today, I'll share a little bit more information how we serve as your advocate and to protect your interests. So let's just go ahead and jump right into estate planning and really what is it? So the purpose of estate planning is really to plan for how you want your property distributed when you are no longer here, and how you want certain business handled while you are in a position where you cannot speak for yourself or handle your own affairs. I think a key thing for this is to think about two big life events. How are you going to transfer your hard-earned assets that you've worked for throughout your life to the people and institutions that you want to have them? And while it may sound a little morbid, I mean, we should always plan for death or potential capacity. And to be honest, these may be two reasons why people sort of avoid this topic. But as responsible business owners and as responsible family members, we want to always think of and plan for the future. One of the things that this can also, estate plan can do is also protect your assets. So that kind of gives you a general overview. So thanks for the courage to, engage today. So what is an estate? It's actually everything that you own in your name and your share of anything that you own with other people. So what is that? That's your home. That could be your vacation home. It could be your, timeshare. It's the car. It's the furniture. It's the jewelry. It's the assets, the stocks and bonds, and we'll go through a list. So it's absolutely everything you own or what you may own with other people. And some of that could be part of what you own with other people might be your business, or joint property with family or friends or investments that you have.
Dolly,
So,
can I?
yeah,
Are you advancing the slides?
I am.
Okay.
Do you not see
They're not advancing. So we
do you not see the slide that says legacy?
No, we're still seeing that top slide. I know I don't know if you can hit the
Okay.
arrow button again.
Yeah, I am hitting the arrow button. So let's see here. One moment. Thanks
It's a
for
really great description. Like I feel like I'm following all of it, but I know you've got great slides that I'm sure folks would like to see too, because I'm sure those are also awesome.
Yes, you're absolutely right. Okay. Do you see legacy now?
We do not.
You do not. Okay. One moment. I am not sure why. So one moment. Thank you all for your patience.
Right. If you are watching this recording later, thank you for bearing with us. We do have a solution, so that we make sure that we are seeing the slides that are from here. And so sharing the PowerPoint, and then I'm going to put it in present mode, and then we're going to get it to the space that Dolly was covering.
There we go.
All right.
There we go. Okay, great. So keep going. Next slide. Next slide.
Is this the one you want?
Okay, and we're going to go to our next slide. Here we go. So just to catch everyone back up quickly, so an estate is everything that you own in your name or you share with other people. So it's your assets, and what it ensures is that your estate's value is preserved and passed on to the people and institutions you choose. So now we're going to kind of turn into what is an estate plan, what's in it, and we'll go to our next slide. So it contains, let's kind of talk about what comprises an estate plan. It's both the real property and personal property that you have. So the real property like land that you own in North Carolina, the home, the timeshare, and your personal property, the furniture, the jewelry, those sort of intangible things, your grandfather's coin collection. So why is an estate plan important if you have minor children? It's important because it determines the custody and financial care of your children. So this is very critical to how you're planning for their future. An estate plan is not limited to the real and personal property. Estate plan should be highly customized. It's a very detailed document for a good reason. Please do not use online forms or paper templates. They are not sufficient documents for estate planning because remember, these are legal documents that become binding. Estate planning, and this, I want to underscore this, is not only for the wealthy, and there is sort of a myth around that. It's for everyone. You may not have a lot of assets today, but you're building your assets as you go along. And so we want to make sure that you're planning and you're prepared and you're constantly looking to the future. And we'll take a next slide. You know, when you're thinking about this estate plan, it's also very important, I'll restate, to work with a financial planner or an estate attorney because they're experts. So you go to the dentist because he studied for 7 or so years. You go to the surgeon because he's probably studied for 12 years. So take your financial health and wellness just as serious and do not cut corners. So let's talk a little bit about what's in an estate inventory. And so this list here is something that you can begin working on now. What a great place to start with just making your list. So the real estate is your house, building, and land. The securities are your stocks, bonds, and mutual funds, and even your, online accounts. It's the interest and dividends that you are owed but have not been paid. It's bank accounts. It's all tangible personal property. It's the life insurance policies that you own. It's the insurance payments that are due to you. So you filed a claim. Let's say sometimes claims take a little while to settle, but when the claim does arrive, where is the money going to go? And it does have to have a designee. It's annuities paid by contract or agreement. It's your retirement saving plan, including your IRAs, your 401ks. It's tort claims paid for pain and suffering even after your death. So let's say you filed a claim and you're owed money for harm that was due to a product that caused you suffering and pain and harm. And you're waiting for that payout. It was a class action suit. I'm gonna, make this more exciting. Well, where's the money gonna go when it's time for them to pay it out? It's your income tax refunds. This is kind of critical. What happens if there's an issue and you pass away? And this can happen all of the time. That you filed your taxes, you're waiting for the refund, your business or your personal taxes. Well, where's that supposed to go? It's your forgiven debts. It's also Uniform Gifts to Minors Act and Uniform Trust to Minors. These are custodial accounts for which you are a custodian. So for example, let's say that you're the custodian for your niece and nephew. Your sister has named you the custodian to oversee their financial plans, taking care of their education, ensuring that they have a place to live. Well, if you're responsible for that and you have not taken time to really designate what happens when you're no longer the custodian, you're not able to be the custodian, we have a free-for-all. And so I guess one of the ways to think about this is, and this is where you can use your business acumen and strategy, because you're always thinking about the what if scenario. Estate plans help you to address the what if scenario with your personal affairs. Okay, let's go on to the next slide and talk a little bit about estate planning documents. So the first one is the primary last will and testament. Well, interestingly enough, I did a presentation recently, and so I just did a query in the audience, and you could drop in the chat if you want to. Do you have a last will and testament? Well, of the 15 people I spoke to, I would say about 4 had them. And 2 of the people who had them, they were unsigned. Now, the other people didn't have one at all. So this kind of gives you an idea about where we are. We're thinking about it. We may have changed the person who we want to, execute, the executor of the will. We're on the fence about it. We haven't finished it, but now, this will needs to be signed. So, I just want to help you think about, the scenarios. So the living will, which is the medical directive, and I'll throw some personal stories in. I have an older parent, but we all need a medical directive. What happens if this allows you to determine who is going to make medical decisions for you when you're not able to. You had a bad surgery, you're in the ICU. Well, who's going to make the decisions about what's going to happen? And these don't always have to be fatal situations. It could be a temporary situation. Some people want to be organ donors, other people don't. Maybe, these are kind of the things that you want to think about. It's powers of attorney. It's your durable healthcare power of attorney and your financial power of attorney. So let's go on to the next slide and kind of dig into that. We're also going to talk a little bit about a living trust. And this will come up in just a minute. Gotta love tech. Okay, oh, there we go. So the last will and testament, your will is going to specify what happens to your property and who raises your children. If you have children, this is pretty critical. The living will, which is the healthcare director, is a written statement that ensures any medical or healthcare related decisions you've made are carried out according to your wishes. Some people don't want to be on life support. Some people don't want to be in a nursing home, indefinitely. And I like real life experiences. So I'm going to give you a real life experience. Unfortunately, a good friend's mom was sick for a pretty long time, and her health really declined over a period of time, a long period of time. And sometimes when you have siblings or maybe your spouse or someone, people have different feelings about letting people go. Now, sometimes as the individual, personally, I don't want to be on life support forever. I mean, you're not necessarily really, part of this earth. It can cause a lot of pain and suffering for your family. It can also be quite expensive. So think about, what do you want your future to look like, and how do you want it to impact your family? Because a lot of these decisions do impact your family. So this also becomes effective when you have lost the ability to vocalize or agree to medical decisions. Now, in this one example I gave, knowing my friend's mom really well, I'm not sure that she may have really wanted to endure some of the suffering she did towards the end of her life just to be here. Because that's a really hard decision to make. So why not make that decision for your family instead of having them make the decision? So this is where we're mustering up our courage. So a durable healthcare power of attorney is a little different from a living will. A healthcare power of attorney authorizes a trusted individual. So we need to think about who are the trusted individuals that we are going to identify in all of these documents, right? Somebody's got to be the person who you're going to embrace and trust. The trusted individual to make healthcare decisions on your behalf if you're incapacitated. And you probably want to have these discussions with them as you're putting together your documents so that they know what to anticipate. Okay, let's go on to our next. Okay, now let's talk a little bit about the financial power of attorney. And I see a note in the chat. It's from Joe Brown that says, just make sure if someone has a small business and they don't have kids, and can you give the will with nephew, but its nephew still in Indonesia? Okay. Yeah, these are all considerations. And is nephew going to come back to manage the responsibility? Financial power of attorney. So this document is only valid when you are alive. If you determine the document to be durable power of attorney, it survives you if you become incapacitated. So there is a big difference there. You designate someone to make financial decisions if you cannot. I want to underscore that every jurisdiction has different laws for estate planning, and many of these list of documents that we're talking about. And this is why you do not want to take them off the internet. What you see on the internet could be a general template. You also don't know who really created that. Do they really know what they're doing? And this is why it's important to consult the experts, the attorneys, the estate planners, people who are certified and you've also done your research on, not just anyone random. So in the District of Columbia, it's critical that language is explicitly included, which gives the power of attorney to manage real property in addition to other financial holdings. Underscore. Okay, we can go ahead to the next slide. Okay, let's talk a little bit about the living trust. And again, this presentation is designed to really get you thinking about this, to kind of introduce you to the key information that's a part of estate planning. And when you leave us today, you're going to be empowered to take the next step, because now you can be conversant and you have a base understanding, and hopefully some of this is resonating with you. The living trust is the document that helps you preserve your assets for loved ones and avoids delays and expenses associated with probate court. And we will talk a little bit about what probate court means in just a moment. Okay, let's talk about some other estate planning considerations, which are taxes and probate. And Kate Marcia Lee wants to know, will there be a replay available?
Hi, yes. Every session that we have done as part of the spring webinar series is going on to the DSLBD YouTube, as well as we are sending out recaps weekly, and we will send out a full recap with links to those recordings from the entire series after it's done next Thursday.
Okay, now let's talk a little bit about taxes, because taxes are part of all of our lives until the very end. Okay. In certain instances, you'll pay taxes. In other instances, you won't. So what are those conditions? You will pay no estate tax if your estate is valued at less than the exempt amount. And you leave your estate to a spouse who is a U.S. citizen. So let's just kind of jump down to the bottom, and then we'll go back up. See where it says estate planning exemption amount. In 2023, the exemption amount is $12.92 million. So that means if your estate is valued at less than $12.29 million, then you'll be exempt. And in 2024, if your estate is less than $13.61 million, you're exempt. Okay. Now, what are the instances where you will pay taxes if your estate is valued over those exempt amounts there, or left to anyone else but a spouse? Okay, let's go to the next slide. So, but you know, the tax laws change all the time, and we also know that tax laws are both federal and local. And depending on who's in the White House, it could vary quite widely. So in order to really, it is just as important to put together these documents as it is to consult an accountant about these taxes, because you want to be mindful of what sort of new liability could be associated with this estate for the people that you're passing it on to, right? Because again, you are trying to avoid a burden on the family or the people or the institutions. And you also want to make sure that you've worked really hard to grow these assets that you have, and you want to make sure that as much of that asset is preserved as possible. So the accountant or financial advisor can help you understand those tax implications. Next slide. So we're going to dig in a little bit to some of these documents to give you a little bit more information about the documents. Okay, wills. So a will is a document that describes how you would like your property or other assets distributed after your death. And I just want to remind you that the will needs to be signed and that you should consider, reviewing your will on a regular basis. So real life example, at that particular workshop, what I heard one woman say that at one point in time, she wanted one child to be the executor. But due to some of their own personal challenges, she decided to move it to the other child or some other person. But that can't happen if you kind of put it in the drawer and you leave it there indefinitely. Now, again, the outcome that you initially desired may not manifest itself. So you want to review it annually like you do your other financial documents. Okay. So it's a legal document, again, that describes how you want your property and other assets to be distributed after death. It should be in writing. It should be in writing. It can be non-cupative, or declared orally. Okay, well, I think that what you should ask your question is, do you want something to be foolproof or not? It's orally or in writing, but we probably want it in writing correct? Because that way it's not left to interpretation. It doesn't have to be, but I don't see how that, I think that seems risky. Of course, it's your decision. Why not just take the step, cross the T and dot the I's? It should be signed by two witnesses in your presence, because you're the person who is drafting this will. And it's in effect until revoked or replaced by a valid subsequent will. So real wills can be revoked or they can be replaced. They can be updated. Okay, next slide. So let's talk a little bit about probate court. Okay, if you have a will, it will need to be probated. It is a legal process where the court will review the assets of the descendant, the person who passed away, you in this case potentially, to determine who is going to inherit them. So a will has to go to court. A person you don't know is going to start, interpreting this will and making decisions. If you have a will, you should name an executor. This is that trusted person in your life that you feel confident is going to fulfill your wishes. If you don't have an executor, and sometimes that happens, the court will appoint, and this is the person you don't know, so sorry, correction. This is the court will appoint a personal representative to distribute your estate. So it will still get settled. Well, probate, we know that the courts don't necessarily move quickly. So this probate can go on for a long time. Imagine if someone starts to contest it. That could add a little bit more time. If you die without a valid will or intestate, your property will be distributed according to DC intestacy laws. So remember we talked about oral will or written will. If you don't have a will, that means that there are laws in place that will help determine how it's distributed. But in this particular instance, you're not there to, share what your intentions were. Probate is public. It can be very expensive. So the people in your life, the institutions, your business partner, right, is going to now be responsible for hiring an attorney to settle this. And what if they don't really have the financial wherewithal? It's also a breeding ground for conflict. So in thinking about your future and your family relationships, really consider whether or not you want to leave things in crisis or chaos, or that as a person, these people are grieving your loss. Are you going to allow them to be at peace? So in order to keep the peace, in order to make sure that there is smooth transition, in order to limit the grief, in order to limit the expense, to ensure that everyone receives what you intended, it's always good to avoid probate to the extent that you can. Okay, next. Okay, instruments that generally avoid probate. So how can you avoid that awful situation that I just mentioned? And I'm just going to go ahead and throw in another example because we got a few more minutes. So I know someone who's going through probate right now. And unfortunately, one person took a car, one person withdrew money from the account. One person decided that one of the people that was named in the will doesn't really deserve to have something. So the one family member had to hire an attorney. And so I think they're probably into close to a year now, and it's still not over. So these are real life examples. The last thing I want to mention, and I'm just going to tell one more example, is, unfortunately, I had a chance to speak with a resident whose mom passed away. The mother intended for her to have the home because she was, kind of the responsible child who managed everything. Because probate can last so long, that's when a lot of kind of complications can arise, a lot of conflict, and sometimes that's when people start taking it upon themselves to make independent decisions about what should happen. Well, in the end, the brother moved in the girlfriend. He illegally sold the home. And she really didn't receive any of those proceeds. So these are real life circumstances that can happen. And you can imagine, also the hurt and pain that was caused around that. And those are the kinds of things that can separate families forever. So let's continue to think about, the future of your family and their relationship. So let's talk about instruments that generally avoid probate. Trusts, payable on death, transfer on death, joint tenancies with right of survivorship, and life insurance. So let's keep going. And we'll talk a little bit about these. Okay, trust. A trust is an arrangement made between an owner and a trustee to hold assets for the benefit of a beneficiary for safekeeping. And it's safekeeping. You use a trust to keep those assets safe from creditor claims or other reasons. So let's say for example, if the assets are in a trust and for some reason prior to your death there was some sort of issue with a creditor, and they're saying, you know what, this was $100,000 trust, and this is an outstanding liability or obligation that we had, and we're going to put, we're due part of that $100,000. So what the trust allows you to do is to protect yourself from certain types of creditor claims, or other. And these are the kinds of things that you would, want to discuss with the attorney. The trusts are multi-purpose tools that can be used for a myriad of things, including, so you could put your property in the trust, distributing assets to beneficiaries, avoiding probate, saving on taxes. And I guess the last thing is, establishing a trust is not necessarily cheap or simple. So again, you can go to the next slide. We are going to use a professional, just like we use a dentist. We are going to use an attorney when we're putting together our trust, or these trusted financial planners. But I want to overemphasize attorney as we're going through this. So let's talk about let's talk about the three types of trust. A trust is an arrangement between an owner and a trustee to hold assets for the benefit of a beneficiary for safekeeping. Okay, I'm repeating. myself. I'm sorry. They're very tools, and they can be used for a myriad of things. Okay, and I'm a little bit behind on my notes. I'm so sorry. So there are three types of trust. A testamentary trust is created by your will and funded by your estate. It aims at saving on estate taxes and appointing someone to manage the assets in the trust. A living trust is created while you're alive. So you could do this today. You serve as a trustee and name a successor upon death or incapacity. It aims to transfer outside of the probate process. And third are the pour over trusts. These were created while you're alive. It's funded after death, and it's aimed at receiving one-time payouts like your life insurance policy or your pension benefits that have not been specifically transferred to anyone by gift, will, or another trust. Okay. All right. Let's keep going. I know this is a lot of information, but remember, the purpose of this is to give you a foundation, some general knowledge that's going to inspire you to start the process. Okay, payable upon death, transfer upon death. An inexpensive way to transfer assets is adding beneficiaries directly to your accounts. In the event of your death, the beneficiary simply provides a death certificate and the funds are dispersed without going to probate. Well, okay, now we've saved everybody a whole lot of time and stress. What is advised is that just be careful of adding joint holders. Okay, so to continue on that same topic, these are very simple additions to your bank, credit union, investment account, title. So where you name a beneficiary to your account, the beneficiary does not have to be present when you add them. Upon death, they simply show the death certificate and they can access the funds. A simple and free way to avoid probate. The last thing about those joint holders is just be careful about adding those intended to be beneficiaries as joint holders of the accounts. A joint holder has rights to the funds even during your lifetime, and the proceeds are transferred to them in whole upon your death, assuming there's no additional joint holder. Kind of as we come to the end, no, I said joint holder, not joint closer. So it could potentially be two people on the account. Lloyd, I saw that. So we want to just share some resources for you and just a few reminders, and then we'll talk about some things we have planned for the future. When you're thinking about how you're going to launch into this process, you can consider estate planning firms. We understand that some of them may provide a payment plan. Not everyone, so don't say DISB said that you're going to give me a payment plan. It's going to be based on their individual practices and policies. Estate attorneys, they may provide a payment plan. There's also some free pro bono services right here in the district that can help you start these process. Legal Counsel of the Elderly is one, and also DC Pro Bono Center. What's exciting is that both at DISB and the DC Bar, we're placing estate planning as a very high priority. We will be offering a number of very intensive workshops, and we're planning a conference in the fall that will be about a 4-hour conference where we go through each one of these topics in detail. So look forward to that. Today was, important for us to share the information. So just want to back up for a minute and just, kind of talk about the last kind of our inspiration around sharing this information. You work hard every day, and we understand that the lion's share of your time goes into building the business and managing the business. And sometimes we become so consumed in that there's not enough time to really think about our financial health and wellness. But your personal financial health and wellness, which is included here, really has a big impact, honestly, on your long-term success, sustainability, and the future of your family. At some point in time, you may even decide to sell the business, or, what happens if something happened to you one day? You don't want to leave your business partner that, you know, you care about, you all work so hard together, in a lurch, nor do you want to leave your family in shambles and trying to pick up the pieces. And I hate to be so direct, but a lot of times that is what happens. And, if you've worked hard to build a family in a community, I'm sure that you want to work just as hard, and do your part to keep them together, so that they continue to have happy, productive, amenable, amicable relationships, as you move on. So we really want to thank you today, for your participation. And we also want to commend you, for engaging today and starting to explore the process. Following this workshop, we're going to share a online PDF, that has a lot more detail in it, so that you can kind of scrub the information down, and that you'll be even more prepared to start having the conversation, with your attorney and your financial planners and your accountants. And just remember that, you showed up today for a reason, and probably that reason is not coincidental, and it's not predicting anything about the future other than you're ready to take this step. So, if you only start with three things, start with three things, but try not to put it to the side and forget about it. So thank you again.
Dolly, thank you for that. This is such a good overview. I'm so excited to hear about the additional workshops coming this summer and the conference this fall. We had a couple questions in the chat. They may be more specific for someone to take to an attorney, but I'll cover both of those just to make sure we take a look. They're both, I think, about property. So someone who has a condo, they're asking if they can do a transfer of deed while they are still alive.
I can't, I'm not going to answer any legal questions because I'm not an attorney, so I don't want to step too far out. But here's what I will do. Here's what I will share as part of this conference that we're going to do in the fall. We are going to have attorneys there who can do title searches, specifically for the reasons of looking at the deed. Because we're aware that with so many homeowners in the district and properties that have been passed on from family member to family member, that the deeds may or not be up to date, and that perhaps you want to consider how you're going to manage that deed. So I'm going to leave it at that. So in the interim, if you have a specific question about that and it's pressing and urgent, I would call the DC Pro Bono Center.
Thank you for that. The other question is kind of similar. I think it might go to maybe a tax attorney or an accountant. But this question is for someone who wants to leave a property or a home that is free and clear of a mortgage. Do you have any advice on what has the least amount of tax implications?
I do not. That would be a tax accountant question.
Thank you for that. And then I'm going to ask a few more questions because we have about 5 more minutes, and I think these are maybe a little bit broader. If folks have additional questions, please drop them in the chat. This has been so helpful. Dolly, you didn't really touch on this piece as much, but I think that DISB has pieces related to this. I want to ask you very briefly about reverse mortgages and support for family members who may have gotten into them. So some folks may be coming today to think about their own estate planning. Some folks may be here to be thinking about how can they be helping other family members. And people just don't know a lot about some of the challenges that I think people face when they get into certain situations.
Sure. Well, thank you so much for that question. And actually, we do consider the consideration of a reverse mortgage, or even a current reverse mortgage that you have, as kind of a bigger part of what the estate plan is. And, I think the underlying theme here, and this is the goal of the mayor and the goal of our department, is that we are empowering communities to pass along wealth. In many communities, wealth took generations to create, and it can also be lost or squandered very quickly. At DISB, because we do have oversight. If you have a mortgage issue and you're concerned about it, you can call our agency to discuss what your concerns are. And it could be in the form of a complaint or a concern. You fill out a form. You'll be responded to within 3 days initially to gather information, and then we will assess the information over 45 days. I would also encourage you to check our website, because we are hosting reverse mortgage workshops so that you are completely aware of the pros and cons of reverse mortgages. What we are hearing in the community as we go around to speak with seniors, and this is probably a group of people who may be receiving marketing about reverse mortgages, primarily due to their age, the length of time that they've owned their home, that you really understand the decisions that you're making and what the future implications are. So we want to educate you so that you make an informed decision. We don't tell you what to do, but we can, and actually, Kate, as follow-up to this for your participants, I will send you our reverse mortgage flyer as well. We have some basic information that we can share with you. I also want to add to this too, and this could be somewhat of a tipping point for reverse mortgage or consideration, is we understand that the seniors in your family, a lot of them may own their property outright, but they're strapped for cash. Taxes are increasing, cost of living is increasing, and they're on a fixed income. The mayor, through working with our agency, has a foreclosure and mediation fund. The way that we help assist you, and you can call our office, we fund the housing counseling services. You can call them or you can call us directly. We want to make sure that you don't go into foreclosure. What I have noticed, I worked directly with a lot of constituents in one of the council offices. What I noticed is that a lot of people wait till the last minute. And a lot of this could be, fixable. We can help you get back on track. We serve as the intermediary. As part of our foreclosure and mediation prevention, we give you some legal services so that you don't have to be the person battling the mortgage company yourself. So we want you to take advantage of that. And you should please pass this information along to other people, because our goal is to help you keep that home that you've worked so hard for, and that you can make a decision as part of your estate plan to pass that on to who you want to.
Dolly, thank you for that. And I just want to highlight for folks who are watching, during our spring webinar series, I think we've about 16 sessions, and 4 of them have been with the Department of Insurance, Securities, and Banking, and there's a reason for that. And we've just scratched the surface of some of the services and some of the great things that they do supporting folks here in the district. Dolly, I'm going to ask you one last question, just because I think this would be great for folks to hear.
Okay.
I hear from folks a lot that estate planning doesn't make sense for them because they're in too much debt. So they don't feel they have any assets to leave. What would you share on that thought that the folks sometimes express?
Because they're in too much debt. Well, I mean, I guess, I think you should, some of the debt you have could become the responsibility of your family. So what I would say is that this estate planning and having the conversation with your tax accountant and your attorney is still very relevant. I wouldn't put my head in the sand about that, because, yes, in certain instances, the debt could pass on to your business partner. It could pass on to your family. And do you really want that? So I think the way to think about this holistically is, it's not the end of the day. People turn their lives around all the time. They also turn around their financial situation all the time when they remain active, proactive, intentional, engaged. So you're here today because you've learned a lot and you showed up. And so I would say be hopeful and take the next steps to kind of evaluate it. You might be surprised at, what could happen. It may take a little while to dig out, but have a plan, because that debt is going to burden you personally one way or the other too.
Allie, thank you so much. I know we are at time. I could keep asking you questions all day, but I know that's why you also have wonderful workshops and a conference coming up this fall. Thank you once again, and I'll go ahead and close this out.
Okay, thank you. Thank you all. And I hope everyone has a wonderful holiday. As one last thing I want to say, Kate, is we are also the Office of the Student Loan Ombudsman. If you or any of your family members have a student loan and you feel as though you would like to have that review to if you're having an issue with paying that student loan, if it is on hold, the student loans could be some of that debt the other gentleman was talking about. I don't really know. But we are the Office of the Student Loan Ombudsman. We're very proud that we have been very instrumental in having some student loans forgiven, renegotiating their terms, but there is a window of opportunity right now around student loans that has not existed. So please take advantage of that. We also have general financial education resources. We have a program called Bank on DC that allows people to have low or no cost bank accounts. 90 million Americans are underbanked, meaning they do not have a bank account. Many of your employees, which I've heard, sometimes come to you, you're ready to hire them, and they don't have a bank account. You cannot pay them. So, keep that in mind as a financial resource for us. And then lastly, if you ever have an issue with your insurance company, your bank, or, any investments that you have, or you've been a victim of fraud or any type of fraud, we are the agency to call. And we're here and ready to help. And we've been very successful in, working with residents. And that's our focus, to ensure that you are financially protected.
Wonderful. Thank you so much.
Thank you all. Thank you, Kate. We appreciate it.
And I think I'm trying to get the recording to stop. Stop sharing my screen first and then stop the recording.